This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 20th, 2022. Our question this week is, what are assets and liabilities? The answer will be provided later in the video. This week the market ended lower. The Dow Jones Industrial Average decreased minus 0.86% on Friday and was down minus 0.16% for the week. The S&P 500 decreased minus 1.29% on Friday and was down minus 1.21% for the week. The Nasdaq decreased minus 2.01% on Friday and was down minus 2.62% for the week. Looking at the week, we can see that there were 7 down finishes versus 8 up finishes for the major indexes. On Monday and Thursday, all the major indexes finished up. On Tuesday, the Dow Jones Industrial Average and the S&P 500 finished up, while the Nasdaq finished down. On Wednesday and Friday, all the major indexes finished down. The new unemployment claims were 250,000 versus 260,000 expected. Retail sales were little changed in July. Home builder sentiment turned negative. Home buyers are backing out of existing deals. Home sales fell nearly 6% in July, and U.S. Treasury yields climbed on Friday, with the 10-year yield hitting 2.98%. New unemployment claims, retail sales, home builders sentiment, home buyers backing out of deals, home sales falling, and the U.S. Treasury yields climbing are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are assets and liabilities? From a business perspective, assets are what a business owns and liabilities are what a business owes. Assets and liabilities are listed on a company's balance sheet, which indicates a company's financial position or their financial health. Assets are generally thought to be a resource with economic value to an individual or corporation or country that owns or controls, and liabilities are legal financial debts or obligations that arise as a result of normal operations. However, according to Robert Kiyosaki, the author of Rich Dad, Poor Dad, assets are those things that put money in your pocket, and liabilities are those things that take money out of your pocket. In other words, assets are things that give you positive cash flow, and liabilities are things that have negative cash flow. With that definition in mind, is your house an asset or a liability? What about your car? How about your stocks? Do you know how to use stocks to give you positive cash flow? Or do you own any stocks at all? If not, why not? It's because you do not understand anything about the stock market? Well, it was not taught to you in school. And if you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is the Southside Trading Watch List from the week ending August 20th, 2022. The strongest performer on the list this week was Invesco Diversified Commodity ETF, ticker symbol PDBC. In the second column, it increased 0.17% on Friday, but was down minus 0.51% for the week. PDBC is an actively managed exchange-traded fund that seeks to achieve its investment objective by investing in a combination of financial instruments that are economically linked to the world's most heavily traded commodities, like oil, natural gas, gold, silver, lumber, agriculture, produce, and raw materials. Looking at a summary of results, you can see that PDBC has increased almost 25% year to date. I did not trade or generate cash flow from PDBC this week, but I may in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 index ETF SPY. The Southside portfolio is down minus 0.69% versus minus 11.12% down for SPY, a difference of 10.43%. The Southside is beating SPY by almost 10.5%. The cash flow generated by the Southside cash flow system for this week was 7.94% of the portfolio account value. The account value changed by minus 2.24%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.16%. Bitcoin watch. Bitcoin lost almost 12.5% this past week, and it continues to be in a bear market. It has lost over 69% of its value from its all-time high it achieved in November 2021. I sold option contracts on two positions this week. They were both puts that ranged from $112.01 to $205.36. You can get more details, including the total dollar amount of cash flow for the week on the website southsideschoolofinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. Level 1 being for beginners, level 2 intermediate, and level 3 being for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.